Welcome back to the IT Investor Podcast, the show where tech professionals turn their W 2 income into long term wealth through strategic, scalable real estate investing. I'm Pramod.
And I'm Wally Taylor. And today we're talking about one of the most important skills you can have as an investor: how to break down a deal like a pro so you're making decisions based on facts, not FOMO.
This episode is for anyone who's ever seen a can't miss deal on a website or in pitch deck, but wasn't sure if it was truly an opportunity or just well marketed noise.
Yeah, Pramod, here's the thing. Too many investors chase shiny objects. It's a hot market, or they're projecting a 20% IRR. Sounds great. And then you peel back the layers and you see those projections are built up on assumptions that just don't hold up.
Yeah, and which is why, Wally, we rely on three things that don't lie, right? The data, the documents, and the patterns.
Exactly. Data tells you what's actually happening right now. The documents confirm those facts, and patterns give you a peek at the property's future if nothing changes.
Yeah, and it is not so complicated, Wally. For data, we review like the rent roll, the trailing 12 months of financials, comparables for properties, the market trends, the job and population growth, occupancy rates. And this tells us the property's current position in the market.
Absolutely. And documents, we're talking about inspection reports, lease agreements, title reports, and the deed. Basically anything that proves ownership, condition, and what the tenants have agreed to.
And as for patterns, these are recurring trends you only notice if you have seen enough deals. They often reveal risks or opportunities which others miss.
Yeah, so here's some examples of some of these patterns. Fences kind of keep creeping up every year. This might be a signal of deferred maintenance that's just catching up. Flat or dropping rents. This could be poor property management or the sign of maybe the market is softening in that area. You may see high tenant turnover, which is often a sign of management or tenant quality issues. Or rent that's below market average might be a good potential value add play. All leases expiring in the same month, that could be a serious exposure to risk.
And I know, Wally, since you are also in the IT field, you wouldn't release any software update without testing every major function, right? So having said that, you shouldn't buy a property without testing every assumption. So, Wally, you got 20 deals in your inbox this week. I want to ask you, how will you decide which ones are worth your time? And how do you do that?
Yeah, Pramod, great question. The 5-minute deal screen is pretty easy to do. You can think of it like a quick pre-flight check, just enough to see if it's airworthy, but you're not quite rolling out the hangar just yet. Here's what I look at in my first 5 minutes. What's the price per door? Does it line up with market comps in the area? Rent roll versus market rent. Is there room to make those rent increases? What's the occupancy rate of the property? If it's under 85%, that means there's probably more questions you need to ask before moving forward. I personally like to see the T12 actuals. I don't want to see what the brokers have projected in a pro forma. Same for the cap rate. What's the actual cap rate versus pro forma cap rates? If something's way off in any of these, it's really not worth a deep dive for me.
Yes, and we call this the initial filter, right, Wally? And if it doesn't clear this stage, taking the next step isn't worth.
Yeah, exactly. No need to fully deploy all your resources on something that's already showing you that it's not going to work. All right, so let's talk a little bit about deal analysis, how we actually underwrite something. If it clears the filter first, now we're going to move on to full-on underwriting.
Yeah, so Wally, as you know, by now I have purchased about 4 properties. We take a 7-step process, and the 7-step process is something like this. First step is we do the income projections, and based on conservative approach, we do this with a market supported rent growth. Basically, we are going to put all the numbers for the next 5 years and see how the property performs. That's what it is. The second step is the expense projections. In the same spreadsheet, you consider inflation and all that and project the expenses. Normally, we look for a percentage about 40 to 50% of the gross income in the expense projections. Third step is to get the debt to service coverage ratio. And this number is actually very important for the bank to secure the loan. And this number should be about 1.25 or more. Fourth step is to get the capex and reserves. So whenever we purchase a property, we do need to allocate some funds depending on the property. for the capex and reserves. And this can be allocated for large repairs, probably for a roof or HVACs or for improvement of parking lots. Essentially, these are big ticketed expenses. And the fifth step is the cash on cash return. This tells you what your annual return of cash is. And this number is very important when we present the deal to our investors. And similarly, there are other numbers like the IRR and the equity multiple, which is also an important measure when we are presenting the deal to the investors. And the IRR or equity multiple, we usually model it over a 5-year hold. And the last step is to calculate the exit cap rate. We always stress test assuming rates will rise and based on which we underwrite the deal.
Yeah, and I'll even add a little twist to this process, Pramod. You may even want to underwrite different versions of a deal once you've kind of zeroed in on something that you really like. Underwrite, your base case. Everything just kind of holds to whatever your realistic expectations are. You could underwrite for a worst case, maybe inflate taxes and your insurance expenses, make those a little bit greater. And then maybe do a best case, do the exact opposite. That way you kind of get a good idea of kind of the range of what the projections for your returns may look like for yourself and your investors, whether the deal goes really smoothly or things get out of control a little bit.
Yeah, exactly. That actually really helps for the investors to gauge whether they would like to, invest in the deal or not. So I always try to come up with 3 cases, which is the best case, the worst case, and in the middle is the average. So once after you underwrite the deal, the next step is to do the due diligence. And in this due diligence, you validate each piece or it could kill the deal.
Yeah, right. This is your chance to trust but verify the deal, right? So there's some things to check.
Yeah. And Wally, let me go over what all things we do check in this due diligence period. So there is the financials piece, which we have already mentioned, that we would be reviewing the T12s, the rent rolls, and the bank deposits or the bank statements. The leases. This is to verify the terms or the tenants, the concessions, if any were given, and the tenant legality. The third piece is the physical inspection. This is where we walk with the inspector. We schedule like a building inspector, and we can walk to each and every unit in all the common areas of the property. And we bring in a specialist for this inspection. It could be a roofing guy or a HVAC guy. The next piece is to review the title, the survey, and the zoning, and ensure it's legal and matches the current use. And the last piece is if is the property in compliance. So check for any violations or any unpaid fees or taxes.
Yeah, that physical inspection is really really important.
Yes.
I've been I could think of one property in particular. We were looking at some property in the San Antonio area once, and turnkey property according to the broker, right? So we flew out to go check it out, walk in the property, took a look at some of the units. We saw one with a roof that was sinking in because of water damage. We found mold in one of the units, siding falling off.
And that's a turnkey property.
Yeah, your definition of turnkey could be much different than what the seller's broker might be. So definitely always go and
Yeah.
physically
And
walk
just
yourself.
imagine if you hadn't walked to that property just by looking at the pictures
Mhm.
on the computer, you can be easily fooled, right?
Absolutely. Yeah. Never assume. You must always confirm everything for
Confirm
sure.
everything.
Some red flags for me. Some big walk away signs. If we're missing financials, and this is a tough one for smaller properties. A lot of times you have these mom and pop owners where they're doing their T12 might not be a T12. It might be non-existent or handwritten stuff. But for the most part, bigger deals you want to see a real T12. Those missing financials. If there's any discrepancies between the listing and what's actually there in reality, major deferred maintenance. That's a big red flag. Poor tenant quality, that could just be a sign that the property management company is not doing a great job up front. Unrealistic cap rate assumptions, or if the broker is really trying to push you to waive contingencies, those are all red flags. Red flags for me.
Correct. And always remember, you can always find a better property. So don't get emotionally attached to a property. And it is not going to be your last deal. If this one doesn't work, another one will work.
Yeah, you make a good point there. There is no such thing as that last deal unless you take that bad deal and it destroys your career as a multifamily real estate investor. It could be your last deal, but desperation is not the business model, right? There will be more projects in the pipeline.
Yes, yes. And Wally, for the benefit of the viewers, let's go over some of the tools which can be helpful in doing this due diligence. So we do have Google Sheet Deal Analyzer, which we can share. There is a Rentometer. It is an online website where you could see how much each unit in your area rents out. You could also get that a similar kind of info from apartments.com or Zillow or Bigger Pockets Calculator. I haven't used the inspector.ai for rehab estimates, but I heard good reviews about it. And also, we will include in this podcast show notes the due diligence checklist.
Yeah. So if you want that underwriting template, DM Pramod or myself on LinkedIn or on Instagram, and we'll send it over. No spam, no one-time crypto offer. Happy to share resources with everybody.
And great deals aren't found by luck. They are found by disciplined analysis and thorough due diligence.
Yeah, one bad deal can wipe away 10 good ones. So you want to make sure you pick that one great deal that can change your financial future.
If you have got a deal and you're unsure about it, send it our way. We are happy to give a quick feedback on it.
Absolutely. Yeah. Please share this episode with somebody who's looking at their first investment. Leave a review in the comments, and we'll see you next week.
Analyze smart and invest smarter. Thank you.